Have you ever thought about buying a luxury EV, maybe something premium, and then stop to wonder, well, how much will this actually be worth in a few years?
Yeah, it's a common assumption, isn't it, that premium means a better value retention.
Exactly. But the EV market is changing so fast, things aren't always what they seem. So today, we're really digging into one specific case, the value story of the Audi Q4 e-tron. And it's quite surprising.
Right. Our goal here is to unpack what our sources are telling us, give you the key takeaways on the Q4 e-tron's value, how it holds up, or maybe how it doesn't.
Okay, so let's get straight to it then. What's the big picture?
The big picture, the core finding really is that the Audi Q4 e-tron shows significantly faster depreciation than you might expect. I mean, we're talking potentially losing over half its value in just the first 3 years.
Half? Wow.
Yeah, and some analysis even push that number higher, maybe towards 60% or even a bit more.
Okay, hold on. Over half its value for an Audi. That seems steep. What's driving that? Why this model specifically?
First off, and this is a big one, assembly location. The Q4 e-tron is built in Germany.
Right, I knew that.
Which means it's not eligible for that $7,500 US federal tax credit.
Okay, so right off the bat, new buyers are missing out on that potential saving.
Exactly.
That makes sense. What else?
Then you've got the broader EV market context. Think about the aggressive price cuts we've seen, especially from Tesla.
Oh yeah, those definitely shook things up.
Absolutely. Let's take a specific example. Say a 2022 Q4 e-tron 50 Premium Plus.
Okay, popular trim?
Right. Original sticker price, the MSRP, was around $55,195.
And now, 2-3 years later?
Well, today, the fair purchase price, what people are actually paying used, is hovering around $27,500, give or take.
So that's almost exactly 50% gone.
Yep, roughly a 50% loss in, say, 2.5 years. And like I mentioned, some data suggests the average for the 22 line could be closer to 61% depreciation.
61%.
We've even seen 2024 models hitting the used market already with huge discounts. You might see one listed for $39,900. It started near $60,000.
Wow, that is much faster than I would have guessed for a luxury German EV. So, what does this mean for you, the listener, if you're considering a Q4 e-tron?
It really depends on whether you're looking new or used. If you're buying new, you have to see it as, well, more of a lifestyle purchase, not really a financial investment. The depreciation is just too steep right now.
So maybe leasing is the way to go for new.
Leasing could be a much more financially sensible approach. You basically transfer that risk of the unpredictable residual value to the finance company. And Audi Financial Services often has lease cash offers to make it more attractive.
Okay, so leasing for new.
The forecast suggests the Q4 e-tron might only hold about 30 to 35% of its original MSRP after 5 years.
Ooh, 30%. Okay, so let's wrap this up. What's the main takeaway here?
Well, the Audi Q4 e-tron is, by all accounts, a solid vehicle. It delivers on the Audi promise: quality, tech, comfort.
But
its financial story is heavily impacted by these external market forces and specific disadvantages like the tax credit. The value just doesn't hold up like you might traditionally expect from the brand.
So it's a good car, just maybe not a great store of value right now?
Precisely. And this whole situation creates two very different scenarios. For a new car buyer, it represents a significant financial risk unless you perhaps lease. But for a savvy used car buyer, it's a remarkable value opportunity. Getting a premium electric Audi for potentially less than half price after just a few years, that's compelling.
It really makes you think, doesn't it? How this kind of dynamic where a car is simultaneously a risky buy new and the bargain buy used might start to reshape the entire luxury EV market going forward. Something to definitely keep an eye on.